The room was quiet, too quiet for a $100 billion ask. Across the table sat America's oil giants, Exxon, Chevron, Shell, men who have already lost billions in one place, Venezuela. Then President Trump spoke. Spend $100 billion, your money, not Washington's. Go back in, rebuild everything. Why? Because cheaper oil means cheaper lives. $50 a barrel, lower prices, less pain for Americans. And in return, he offered one thing: not contracts, not guarantees, total security, no fine print, no enforcement plan, just a promise made in the White House. To some, it sounded bold. To others, reckless. To the oil executives in that room, it sounded familiar. They had been promised safety before, and they had paid the price. If you think this is just about oil, you're missing the real story. This is about power, risk, and how far a government can go when markets hesitate. Stay with me. Because to understand this gamble, we need to step back and ask one deeper question. What problem is Trump really trying to fix? At the surface, the problem looks simple. Oil prices, they rise. Costs rise with them. Gas, food, transport. Everything feels heavier when energy gets expensive. Trump's argument follows that logic. Increase supply, flood the market, force prices down. Venezuela matters because it sits on massive oil reserves. Reserves that are underused, broken, idle. In theory, bringing that oil back online changes the global balance. More barrels, less leverage for producers, lower prices everywhere. But this is where the story tightens, because oil is never just oil. It is contracts, courts, governments, stability. American companies are not afraid of risk. They price it every day. What they fear is uncertainty without rules. Executives in that room were not asking for higher profits. They were asking for predictability, for laws that hold, for systems that last. And that is the real tension, economic logic versus political reality. To see why this gap exists, we have to look backward at how Venezuela got here in the first place. To understand the hesitation, we have to rewind not years, decades. Venezuela was once a prize. Rich reserves, easy access, huge promise. American oil companies went in, they invested, they built, they trusted the system, and then the system broke. Rules changed, contracts weakened, politics overrode economics. Companies didn't just lose confidence, they lost money, billions of dollars, real capital, real damage. That history still lives in boardrooms today. So when Trump says come back, executives don't hear opportunity first. They hear memory. This is the cycle of resource politics. Boom invites investment. Power centralizes. Institutions erode. Capital retreats. Venezuela is now at the bottom of that cycle. Production collapsed. Infrastructure decayed. Trust vanished. That is why Exxon's CEO used a single word: uninvestable. Not because oil is gone, but because the system is, and until that system changes, every promise sounds fragile. Which brings us to the first real flashpoint, the moment optimism meets reality. The first crisis surfaced almost immediately. In that White House room, an executive asked the question everyone was thinking: what happens if Venezuela collapses again? Not emotionally, financially. What stops another wipeout, another lost decade, another billion gone? Trump's answer was blunt. The companies know the risks. That sentence landed hard because risk is acceptable. But unprotected risk is not strategy. It's a gamble. Trump doubled down. No government money, no public bailout, just private capital, and a promise of safety. He spoke of control, of routing oil revenue into U.S. controlled accounts, of maintaining influence over Venezuela's government. To him, this was reassurance. To executives, it raised new alarms. Security without structure is not security. It's exposure. This was the first rupture. The moment confidence cracked, if you're finding this tension unsettling, pause here. Follow the logic, because the next layer goes deeper. To understand why these promises feel so thin, we have to look at what's hidden beneath the surface. Beneath the promises sits a mechanism few people talk about. Oil investment is not about drilling. It is about systems, legal systems, property rights, courts that enforce contracts when politics turns hostile. In Venezuela, those systems collapsed long ago. Trump's proposal does not fix that. It bypasses it. Instead of rebuilding institutions, it relies on power, U.S. protection, U.S. oversight, U.S. controlled revenue flows. On paper, that looks decisive. In reality, it creates a fragile structure because power changes, administrations end, promises expire, oil projects last decades, politics lasts 4 years. Executives know this mismatch well. They are being asked to commit capital today based on security guarantees that may not exist tomorrow. No rewritten legal framework, no independent courts, no durable commercial protections, just geopolitical muscle. This is the hidden mechanism of the deal. Replace institutions with influence. Replace law with leverage. That may work in the short term, but history shows it rarely lasts. And when it breaks fast. Which leads us to the second escalation. Because once power replaces rules, consequences follow quickly. The second crisis isn't hypothetical. It's already forming. Because when power replaces rules, the shock doesn't stay local. It spreads. Trump's plan doesn't just reshape Venezuela. It reshapes markets. 50 million barrels. That's what Venezuela is now required to export to the United States. Not someday. Now, that volume changes incentives. Prices move, allies react, competitors adjust, and then came the signal that made diplomats nervous. Trump spoke openly about control, about holding influence over Venezuela's government for longer than a year, about oil revenue flowing through U.S., managed accounts. To investors, this felt like leverage. To the world, it sounded like ownership. The United Nations noticed, international partners noticed. They called it interference. This is where the second escalation hits. Because oil deals don't exist in isolation. They sit inside global order. When one country openly treats another's resources as strategic assets, others respond. Quietly at first, then decisively. Markets hate uncertainty. Alliances fracture under pressure. And suddenly, what began as an oil strategy starts to look like a geopolitical stress test. And that stress doesn't stop at borders. Next, it hits something closer to you. Now let's bring this down to ground level. To you, because when leaders talk about barrels and billions, real people absorb the shock. If oil prices fall, you feel relief. At the pump, on grocery receipts, in daily life, that's the promise. But when systems are unstable, the cost hides elsewhere. Jobs become fragile, markets swing harder, retirement funds feel the tremors. For Venezuelans, the stakes are heavier. Their labor powers, the fields, their economy depends on the flow. Yet control sits elsewhere. Revenue routed, decisions made far away, sovereignty diluted, and for you, the viewer, the question is uncomfortable. How much instability are you willing to accept for cheaper energy? Because every short-term gain carries a long-term bill. This is not abstract policy, it's lived reality. If this analysis helps you see the system more clearly, stay with me, share it, because understanding power is the first step to not being crushed by it. And the ripple doesn't stop with people. It expands outward, across borders. Zoom out now because what happens in Venezuela never stays in Venezuela. Oil is global, so is reaction. When the United States moves to lock in Venezuelan supply, other powers recalibrate. Quietly, strategically, producers see pressure on prices, allies see precedent, rivals see opportunity, and then Trump widened the frame. In the same breath, he spoke about territory, Greenland, a self-governing land tied to Denmark, a NATO ally. He warned that if the U.S. doesn't take it, China or Russia will. Easy way or the hard way. That wasn't a joke. It was a signal, because taken together, Venezuela and Greenland tell one story. Resources equal leverage. Leverage equals security. Security justifies reach. But this logic strains the post-war order, the one built on sovereignty and alliances. If power decides ownership, treaties weaken. Trust erodes. NATO feels the pressure. Markets listen closely to these shifts. So do governments. And once trust fractures, rebuilding it costs far more than oil ever saves. Which brings us to the hardest question of all. What happens next? Now we face the future. And there are three paths ahead. The first is the optimistic one. Institutions change, legal frameworks stabilize. Venezuela reforms enough to earn real trust. Investment flows carefully. Production rises gradually. Oil prices soften without shock. In this scenario, Trump's gamble looks bold. Even visionary, security holds long enough for systems to catch up. The second path is the middle ground. Oil flows, but politics stay volatile. Investments come in pieces. Executives hedge. Capital stays cautious. Prices dip, then bounce. Uncertainty becomes permanent. Nothing collapses. Nothing truly stabilizes. The system limps forward. Then there's the third path, the dangerous one. Power replaces law completely. Promises expire. A political shift breaks the deal. Capital pulls out fast. Markets panic. Venezuela falls deeper into chaos. And trust, once lost again, vanishes for a generation. History tells us this path is not rare, because systems don't forgive shortcuts. And that leaves us at the final reckoning. Not about oil, but about how power chooses to behave when markets hesitate. This moment will be remembered, not for the number, not for the oil, but for the choice. Trump stood before America's oil giants and asked them to bet on power over institutions, on promises over systems, on speed over stability. Maybe it works. For a while, cheaper oil, lower prices, political wins, but history whispers a warning. Markets can forgive risk. They cannot forgive uncertainty without rules. When governments replace law with leverage, the cost always comes later, quietly, relentlessly. And that cost never stays contained. Venezuela is the test case. But the lesson is global. If you want to understand the world as it's actually changing, not as slogans describe it, stay here. Watch closely. Share this analysis, because the next chapter won't be about Venezuela. It will be about how power, once unrestrained, rewrites the rules for all of us. And that story is just beginning.